Hi, today is the 13th of November, and let us look at the Nifty chart once again. Now, this is the weekly chart of Nifty, and as you can see, for the past few months, the Nifty has been only going sideways. A sideways movement in any market is likely to be a triangle. So, that is our working structure at this time, where we have wave A, B, C, D, and wave E down should start very, very soon if it is not already started. Now, if this structure is right, we will see a small correction, a three-wave correction for wave E, and then we will see a big breakout to the upside for the fifth wave of this sequence. So this is a fourth wave triangle which we postulate is going on. Now let us dial down to a daily time frame. Now this is a daily time frame, and again you can see three wave structures for wave D which is completing. Now going to the hourly time frame, the hourly time frame definitely shows a three wave structure, and here you can see that this is the C of the ABC has completed five waves and they started coming down. You can also see that there was a significant bearish divergence in RSI as this fifth wave was getting over. And what is even more striking is the way you can see that this is a very nice small head and shoulder pattern which triggered to the downside today. Now, considering that we were in a pretty good bullish phase, we were long until this morning, and once this level started to give way, we squared off all our longs and have actually started making stock specific short positions. So, what is the possible outcome? Now, if this whole thesis is right, if this whole thesis is right, we should retrace at least 50% of this advance right from these lows. So let us look at that. And a 50% advance will take us easily to the 11,350 to 11,500 levels or so. So definitely a retracement to the previous fourth wave low of 11,500 should be in order in the next few days and a couple of weeks. So let us see what happens. One more thing let me point out. Let us go and look at the Bank Nifty chart just for a moment. The Bank Nifty daily chart here you can see again, but just one moment. If you remember in my earlier videos, I had remarked that the Bank Nifty was here and it was supposed, and whereas the Nifty was already making a newer high. And at that time, we had forecasted that Bank Nifty should also catch up with the Nifty and exceed this high, which it did. So that was something which worked out. But now today what happened? Today we have a bar which actually is a bear engulf bar which has engulfed the closing of the previous three bars, actually four bars. That is a very powerful bar. So this is actually not a double close key reversal, or actually we can say a four bar close key reversal bar. Based on this bar, we went short on the Bank Nifty at the close, and we have a stop loss at this high, and we will be looking down. So going back to the Nifty, we are looking at a target of somewhere around 11,400 to 11,500 at the minimum for this wave E decline. And this wave E decline will then set up a very fantastic bullish opportunity for wave 5 to much bigger and newer highs. So that is our working hypothesis as of now. Where are we wrong? We can be wrong if the Nifty turns around and takes out this high with a lot of force and actually exceeds this high and this high. Actually, this high is the critical high. If it exceeds this high and makes a newer high with momentum, then we right away assume a more bullish stance that wave 5 actually started from these levels. And that would be nice for the market. Otherwise, we remain short. So let us see what happens. This is a very, very interesting juncture. And this is forming somewhere around the middle of the month. So we think that by the 15th of this month, we should have a very clear picture of what is happening. That is all for today. Take care. Bye bye. All the best.